traders, Gary Wagner here. It is approximately 10:30 in Honolulu, 4:30 in New York. It is Friday. Happy Aloha Friday, as we say on the islands. 28th day of August, 2015, and this is the daily report for gold and silver. We did see the precious metals closing moderately up on the day, however, down on the week. As you can see, we are just closing in gold. We're looking at the spot market or Forex market. In gold, currently at 1134 and change. Puts it up about $8-9 on the day, a high of 1140.88 with a low of 1124. So we had a pretty strong finish for the day, but as I said, when you look at the weekly chart, and that's what this is right here, you can see that in terms of the week, it opened on Monday at 1160 and closed at 1134. So we gave up quite a bit of value in gold over the week. Now, when we look at silver, silver also is trading moderately higher on the day, 1457 and change, puts it up roughly 10 cents, the low 1439, the high 1469. But the key is, although we're finishing strong today and had a very strong day yesterday, when you look at the weekly charts on silver, the real picture comes out, and that real picture is a dramatic drawdown in which we saw the market actually come and test that $14, $13.98 level earlier this week. More on silver in a little bit. In other precious metals news, we really saw platinum take off in terms of coming up off of the lows as it came in towards the end of the week, up about $13 today. You can see the last 3 trading days, this being a daily chart here. Let's go ahead and blow that up. But the last 3 trading days were very, very strong as it came off of these lows at about 970. But the real interesting way to look at this market is really to look at a weekly chart, because when we look at what we've seen on the week, we have absolutely a Tambo doji, which is a gravestone doji, and so that is really indicating consolidation in the market on a weekly basis. And traders, in terms of extreme volatility, the winner for the week has got to be Palladium. Now, Palladium up about $19 on the day, 588. When you take a look at a daily chart to get an idea of what we have seen this week, you can see that it hit these lows at around 520, and that would have been on Wednesday of this week. So we had Wednesday, Tuesday, Monday, Friday, it's trading as high as 620. And then roughly 4 days later, we're down about $100 in Palladium. Considerable move considering the value of Palladium. And then we've seen this market recoup. And it also gives us an interesting candlestick when we look at our weekly chart in Palladium. Again, we'll go ahead and blow this up. And this actually looks very, very similar to what we've seen in the equities markets, Dow Jones Industrial Average on our weekly chart, as well as the Standard & Poor's 500 on a weekly chart. Tremendous low, tremendous recoup, closing very, very near the open. And so that really tells me that Palladium, more than the other precious metals, is trading in sympathy, or in tandem, I should say, with the equities markets, but we had a strong finish in Palladium. So traders, there's absolutely no doubt. This week we have seen it all. We have seen this market under extreme pressure. We have seen it recoup dramatically. We have had extreme volatility in the equities markets. Crude oil hitting a bottom at around 38, 37 and change, I believe, but only to recoup up 10%, almost 10% on just trading yesterday, up strongly again today. So what does that say for the kind of action, or what should we look to see next week in the market? Well, just as we got mixed markets this week, meaning down at one point and up at one point, we're getting some mixed signals in the marketplace itself. And let me show you what I mean. So to do that, the first chart that I want to look at, this is a 700 half a day Japanese average chart with the MACD put on the bottom. And the reason we're looking at this MACD is we noted over the last couple of days that we absolutely had the market cross, but at the time of the recording yesterday, we hadn't really seen what I call this hook, meaning a turn down in the market. Now, we've absolutely gotten that hook on today's trading activity on our Japanese average charts, because it handles price change differently, of course, than what you'll see in a standard candlestick, because it's working with the midpoint. It's showing at 1130. Market looks like it's closed at I'll call it 1132.90, 1133 in that area. We looked at the potential, or what I believe was going to be real support in the market roughly at 1109. On this particular instance, at least for what we're seeing this week, that is not the case, because we ended up finding support at this shorter retracement level, this being 1121 right here. And this, of course, has got two fib retracements, one from 1230 down to 1071, and the second one is from 1171. That's this here, right in here, 1171 down to 1071. And so when we look at that 100-point move right in here, we get a 50% at 1121, and that's where we found support. We also have a green candle there, but we have an MACD showing us an inclination of this market to continue to track lower through next week. However, when we look at a standard candlestick chart, and that's what I've pulled up, same time sequence, 720-minute chart, but when we do that, what we really see is a cycle in which we had a tremendous sell-off in the marketplace. We found support in this particular area, and this being at around 1125. Here's those lows at 1121 right here. We had some lows that just touched a little bit to that area, but certainly not near 1109. And when we also look at the candlesticks themselves, you get this cluster of dojis, which is an extreme consolidation in the market. These three here, followed by a dramatic spike to the upside, which is a variation off a three-river morning star. So we want to take these different technical studies, weigh them carefully, and try to extrapolate what the highest probability is for what we'll see next week. And really, to give us a little bit more clarity, what I've done is I've brought up our daily candlestick chart. Now, on this candlestick chart, I have a series of moving averages, 14-day, 21-day, and 10-day moving averages. I also have the MACD on the bottom. And what we can do is try to extrapolate from our daily chart. And when we look at our daily chart, if you recall, on our half-a-day chart, we had that doji cluster. But when we look at it on our daily chart, we get a single doji. So we've had a defined downtrend, long red candle, star gapped in the center, and then a green candle. So we are getting a very, very strong three-river morning star. And this actually can fall out of that variation because you're genuinely getting a star that's gapped below the real bodies to a degree. You've got a little bit of crossover right in here, but you do have this star which is below the red body and the green body. So what do we look for? Well, on this particular pattern, there's a couple of things we would look for, and that would actually trigger a buy signal. Now, first of all, we would want to see a confirming candle when it reopens on Sunday in Australia, Hong Kong, into London, and comes over into New York on Monday. But that candle would look something like this. So a green candle with a higher high and a higher low. The second thing that we want to look at very, very closely is when you consider these different moving averages, and when we look at the longer term moving average itself, that would be this particular moving average right in here, the black one. That one is coming in as our 21-day moving average. We would look to see that this level right in here is absolutely held in terms of some sort of support. That would be a key level that we would need to hold. If we got that along with this confirming candle here, which would be our green candle with a higher high and a higher low, well, that would trigger a buy signal, and we would look to re-enter the market from the long side. Now, finally, I do want to touch upon silver. Silver's been an extremely funny animal. It's had that extreme range, the extreme volatility. What can we extrapolate out of it? Looking at our daily charts, you definitely get a piercing line, and a pure one. However, you do get a confirming candle, green candle with a higher high and a higher low, but the body is so small that it really doesn't hold a lot of weight. It's not anywhere near a long white line, as it would be called, or a long line itself. Now that, of course, as I said, is on our daily chart. When we look at our weekly chart, as we just talked about, this market has been under such extreme pressure that I am very, very hesitant to take any kind of stab. The only kind of pattern you get would maybe be a three-river evening pattern, but you can't define that as that pattern because you had really a defined uptrend rather than a defined downtrend coming into it. This pattern formed here never really coalesced, but nonetheless, this was a wild week. But then we saw an extremely wild week in the equities markets and the oil markets. Across the board, we have seen some extreme volatility. We'll see what next week brings. I am excited because I think we're going to get a good long trade in gold, but we'll have to see how it opens on Monday. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you on Monday for another daily update review. Bye-bye.